Hi, Jennifer Warren here, and I'm just going to give a quick end of the year update on some of the key directions in the energy transition. So one is that I've been to 12 conferences this year, Business Economists Conference, Blockchain Summits, Fed energy conferences, and all that. And what I can say is really the energy transition is a mashup. There's a lot of centralized and decentralized approaches that are emerging, and the centralized ones obviously include a lot of scale and a lot of fossil fuel production and usage. And it varies, how this looks varies by country, by region, especially if it's a large country like the United States, available resources, policy, and financial resources. And so from an investment point of view, you really have to drill down into what it is that is your wheelhouse. I'm going to talk about three key areas and their dynamics. As I said, fossil fuels, including crude oil, gas, and then I'll talk about renewables a little bit, and also a couple of specific projects of mine to do with my natural capital advisory work. So on the fossil fuel side, with crude oil, so really it's the developing world is driving demand. Right before the pandemic, we were at about 100 million barrels a day. In 2023, we're now at 102 million barrels a day. That's supposed to grow to either 103 or 104 next year, depending on whether, OPEC's right or our US EIA is correct. We were are producing about 13 million barrels a day, and that is from 4 million barrels a day 20 years ago. So that's a big increase, and that's all because of shale, which I've been discussing and chronicling for a very long time, pretty much since 2004. A number that I saw from Bloomberg, they called production by countries, and they said that the US was like producing 15.7% of global oil supply as of May. And so that's a little bit higher than the 13 million barrels. So there's some variation about, whether liquids are included and stuff like that, but we're not going to go into that deep detail. Basically, though, the capital expenditures in the industry was like is going to be about 560 billion this year. Now, that is a big increase. At one point, it was like down to 350 billion, like when ESG and net zero was really, really the resounding refrain back in like 2017, 2018. At the COP28, the climate change talks, 50 oil and gas companies have pledged net zero now, and they represent 40% of oil production. So that's a big gain. And then just boots on the ground in the United States, we drove 270 miles this year. At the bottom of the pandemic, we were at 170. So 270 billion miles. That's a lot of miles. So, and obviously over time, you will get some EV penetration with that, reducing those tailpipe emissions. But that's a whole nother story. Natural gas. So really it's really where a lot of the action is, because it's a cleaner fossil fuel needed to site with renewables for baseload. The rest of the world demands it. It is not going away. We're a huge exporter of it. We started in 2016. Our LNG really helped rescue Europe when they, moved away from Russia's pipeline gas because of them invading Ukraine in 2022. And we're like the largest gas producer in the world, 110 BCFs roughly this year. And we're exporting 13 BCFs, and that's going to grow by 10. So that is going to grow. So that's like we're exporting roughly, over 10% of our gas production. And we're one of the lowest cost producers in the world. We have lower costs. So that's helping us. And something that I heard at one of the Fed energy conferences that I thought was quite notable was that on the natural gas side, just that our US as an LNG exporter now, we've added liquidity and depth to the market, which did not exist before. It was largely a regional market. And I think I might have talked about it here like at the beginning of the year. And that's something in a story I wrote last year called Solving Europe's Energy Crisis. And it was really about discussing this was the beginning of global gas as opposed to regional block driven gas. So that's one big change, and that's not going away. We're going to keep exporting LNG, and that's a good thing because it just gives us a really good footing geopolitically with energy resources. Also on the ESG side of natural gas, a lot of methane pledges by big oil and gas, and that they will really cut their flaring down minimally by 2030. So that's really good. On the renewable side, so it's supposed to grow 35% globally from a low base, relative to the percents that fossil fuels comprise in the energy mix. There's a lot of headwinds to do with minerals, to do with grid integration. The processing of all the critical minerals is owned by China. They're decades ahead of us, and a lot of that is trying to be redressed. And that's going to take time, quite a bit of time, because of mining. So I want to talk a little bit about Texas, because Texas is like really a petri dish of what the energy transition looks like, boots on the ground. Oh, and the other thing I'll get to the Bitcoin miners with the Texas discussion. So Texas is the largest producer of oil and gas in the country. We have the largest renewable market. We have more renewables on our grid than any other state. And our capacity, just for example, as of yesterday, we were generating with 50% renewables on our grid. Natural gas was like 11%, but we have 2 times the wind capacity that we use. So there's a lot of excess capacity. Same with solar. We have 3 times the capacity that we use in solar. And so that is a source of what's called, congestion and curtailment, which is a problem for the grids. And we're facing that here. And there's a lot of legislation happening to change all that. And I know other states are trying to really, become net zero and everything, and they're going to push up against this as well. And what happens too is when you really add a lot of renewables to the grid, you add a lot of cost because of their unreliability. And that's a whole nother, deep discussion. But the interesting thing in Texas, is because we have all this excess capacity of renewables, this is partly why we've seen this big movement of Bitcoin mining to Texas. And the Bitcoin miners, they do use a lot of power, but what they're doing is they're trying to use a lot of the waste and excess power from renewables, but also waste from fossil fuels like natural gas and that sort of thing. So I attended a blockchain summit in Fort Worth, and it was huge. There was, all sorts of political, presidential candidates, and they had 2 stages, and I spent a whole day with the Bitcoin mining stage, and it's a huge energy story, which is really interesting. And they're what's called a demand response. They're developing sort of a demand response initiatives. So where like if we have really high demand, like a horrible 110-degree day, they can shut off like, at the speed of light, even relative to other industrial users. And that's kind of one of their claims to fame. Now, switching gears a little bit to my natural capital practice. So this is doing projects that have sustainability characteristics. It's an advisory for deals and a network that I've been developing. 2 specific projects I'm working on happen to be ranches in the Panhandle. One is a very large 80,000 acre ranch, and I would really call it a real deal ESG asset. It's called the Turkey Track Ranch, and I'll just break down the ESG a little bit. So on the east side, basically, it has 2 centuries of innovative environmental practices and a record that's very notable. And this is in water resources, agriculture, and soil health. On the S side, there's been a lot of homage to its history, which includes a really large Native American component to it. It's located where it's in the north part of the Panhandle, and it's near the Canadian River, which was a huge place where there was a lot of plains and buffalo economy for the Native Americans and that sort of thing. So there's a lot. They have donated to a museum nearby. They have held a lot of celebrations with Native Americans. So there's a lot of interaction with that story. And then lastly, on the governance side, interestingly, that was noted in a book specifically about the Turkey Track Ranch's history, is that this ranch was this ranch, its development spans 3 centuries. And in the last 2, women were largely responsible for expanding the ranch, acquiring and accumulating more land and managing all the ranch's resources. So, and today, 3 women sit on the board of running, the management of running the operation at the Turkey Track Ranch. And there's 2 men. And then finally, I have a 10,000-acre ranch that I'm very hands-on trying to help develop with infrastructure, whether it's digital, energy, and I've done a lot of due diligence running through a lot of different really innovative players in the space, and one of which is a young man named Josh Brooks with Waybright out of North Carolina, and he's what's called a master developer, and he's like offers solutions to really deep and interesting, innovative energy infrastructure plays. And he's doing something in San Antonio that's, quite cutting edge. So, so I would just say that, that's some of the trend work. And then specifically, I have my own, project advisory niche that I'm carving out. Thank you.